Our next presentation will be by Greg McKenzie, CEO of Silver Storm Mining. Silver Storm is traded on the TSXV under the ticker SVRS.V and on the OTC under the ticker SVRSF.
Okay, well, good afternoon, everyone, and thank you for joining this presentation and hearing a little bit more about Silver Storm Mining. I'll speak for 15 or 20 minutes and then stop so that you can ask as many questions as we can fit into the time period. Okay, we are looking to restart the La Parrilla mine that's located in Durango State in Mexico. It's a former producing mine, and I'm leading the effort. My name is Greg McKenzie, and I'm the President CEO of Silver Storm Mining. The asset that we're primarily focused on was formerly owned by First Majestic Silver, several billion market cap company. This mine was their very first mine, and as you can see in the far left column, they produced 34 million ounces of silver equivalent from 2006 to 2019. Due to low metal prices, they put it on care and maintenance in 2019, and then we purchased it from them in August of 2023. We purchased it because of the fantastic geological potential, the in-place infrastructure valued at least 150 million US dollars, a 2,000 ton per day ton per day mill and plant, and a partial mining fleet. And our thesis was that because it was only modest restart capital, if we could drill it over the next period of time, we would be able to create a really good value proposition for our shareholders. So column 3, you can see we did 18,600 meters plus of drilling from August of 23 to the fall of 24. And then we put out a new resource with SRK. We doubled our indicated resource and we increased our inferred resource by 50%. For the restart, it's about a 6 to 7 month restart from the time we're fully financed, according to the technical people. And as a manager, I've added 2 to 3 months on top of that. So I'm guiding to 7 to 9 months from being fully financed. We also, in the 4th column, we also have another asset, which was our first asset. It's really a very large silver equivalent resource. It was discovered by the prior management team. They put out a 2013 43-101 on the San Diego deposit that had a resource of over 210 million ounces of silver equivalent. Since we took over the company in 2020, our management team spent a couple years drilling San Diego. We were very successful, but then we wanted to be in production, so we agreed to do a deal with First Majestic on La Parrilla. This is our capital structure. As of July 21, we were trading at about a 110 million market cap. I think we're at about 130 million market cap today, somewhere in that range. We have First Majestic as our largest shareholder. They got their participation from trading us the La Parrilla project for shares in our company. And so they are a very good shareholder to have on our register. Eric Sprott is our largest individual shareholder. He's at around 12%. And you can see that insiders management, myself primarily, have another 2%, and then the rest are other holders, including a number of the institutions that came in. As of that date, we have about 20 million Canadian on our balance sheet. We did a couple transactions over the last 3 months to raise that capital, and this capital is allocated for the restart. We still are yet to close a offtake agreement. Really, it's a prepay on our metal production. And as per our May news release, we told the market that we'd be raising about 15 to 17 million US dollars to fund the restart. So together with the funding that we already have on our balance sheet, that would be more than enough for the restart. Currently, we're covered by Red Cloud Securities, and they have a 28-cent target. We think our stock will go much higher once we show that we're going into fully financed and going into production. Okay, a few slides about the silver market. Silver is one of the most conductive metals. It's one of the best performing commodities in 2025. Everyone should own some precious metals in their portfolio, either the bullion or the silver equities. What we can see in the market is that over the last 5 years, if you look on the right side of the screen, the red box shows you the last 5 years of deficits in silver market. That means the demand for silver is greatly outstripping the supply from mining for silver. And so the balance of that supply is coming from recycled material. But you can only recycle silverware once, and then it's consumed. So we're continuing to see this deficit, and don't be surprised if we get significant upside shocks in the silver price, because as this deficit continues, the silver will have to come from somewhere, and so that will force silver prices higher in order to spur new supply. So what are the uses for silver? AI usages, electric vehicles, high-end electronics, and primarily photovoltaics. And photovoltaics are really used for solar panels. Very large solar panel farms are being built in Asia, and that's where big growth is for photovoltaics and solar panels, and we expect that to continue. Although the U.S. is far behind, it's the largest economy in the world, and it wouldn't take much for the U.S. to get into this sector, and you can see the demand for silver would grow exponentially. Most of silver is byproduct. You can see by this pie chart below. Primary silver production is about 28%, and the rest of silver production comes from byproducts. What that means is you would have to have a significant increase in capital investment for byproducts before you would see silver production move up appreciably. And so there's a lot of headroom for a small producer like us. We're going to be producing about 2.7 to 3 million ounces a year. There's a lot of headroom for silver prices to move higher before there would be a supply coming onto the market that would curtail the upward trend in silver prices. I could say much more about that, but I'll leave it here for the moment. If you prefer to look at silver from a more technical perspective and you consider the gold-silver ratio, each one of these red lines, if you're looking from left to right, it's a slide down. These are reversion to mean lines. And what that means is over most of the history of gold and silver, say the last 30, 40 years, it's traded in sort of a 65-to-1 gold-silver ratio. And every time the gold-silver ratio gets up, you can see in the mid-90s, it got way up to over 100, and then there was a reversion to the mean. So then that means silver price is going higher every time there's a reversion to the mean. So we had a 100% increase in silver price in the mid-90s. In around 2010 global financial crisis, we had a 400% increase in the silver price. Right at the beginning of COVID, we saw a 138% increase in the silver price. And again, you can see that the gold-silver ratio is around the 100 to 1 level, and a reversion to the mean from where we are today could see silver prices going from $51 to $82. That's what this slide is telling you. Right here on the far right, a reversion to the mean would drive silver prices much higher. And typically, the metal, the commodity will move up in price. So you could have like a double in the metal price, but a double in the metal price would imply a 4x in the equities. So where do you want your money to be? Some in the bullion and some in the equities. And this slide is just telling the same story, but in a table form. You can see at the top, the top heading is the gold-silver ratio, and on the left heading is the gold price, and in the middle of the table is the implied price for silver. On this slide, you can see where our assets are located. The San Diego asset, so we're located in Durango State. Our San Diego asset is the first asset that we had that was discovered back in 2013 and before, and then the La Parrilla is the mine we purchased from First Majestic, which is very close to Durango City. They've been mining in the state for over 500 years. Currently, there's 23 producing mines in Durango State. Very easy to get there. We typically fly out of Toronto early in the morning. We make a late morning connection in Dallas, Texas, and then fly on to Durango City, and we're at the mine at La Parrilla by 1 o'clock. So it's very easy to travel to. Excellent infrastructure. We're on the grid, and everybody likes to, the asset just really shows well. Everybody likes to those who've gone here to look at the mine really like the tour. So here's another aerial picture of the plant. As I mentioned, it's a 2,000 ton per day facility. One of the keen or more interesting points about this mine is that it's 2/3 silver and 1/3 lead and zinc. There's a bit of gold in there, but we just lump that into the silver. It's like about 1 or 2% contribution from gold. So this deposit is anomalous in that it's 2/3 precious metals. Most silver, lead, zinc mines are about 40 to 50% silver and the balance lead and zinc, but this one is 2/3. This is the resource statement from SRK that I mentioned earlier. We got 27 million ounces of silver equivalent. If you add up right in the middle of the page, the 10.8 million and the 16.3 million below. So that if we're producing 2.7 to 3 million ounces a year, you can see that we have at least 10 years of resource if it all went into the plant. In addition, we have about 3.8 million ounces in pillars that First Majestic routinely mines at their other operations. And so we expect that we will recover much of these pillars as the years go by. These are the underground mines, Rosario, San Marcos, and Cabrillas. It's all underground that we'll be doing. We're fully permitted. Many folks don't appreciate the value of having a permit already. Permits in mining can be very difficult to get, even under the best of circumstances. And having a fully permitted mine is such an advantage. So that's really good for our company. On the next few slides here, we just detail some of the places where we did drilling. You can see the green and the purple, the two different phases of that 18,000 meters of drilling that we did. And here are some of the key highlights. For example, in the Cabrillas area, 14.8 meters of 500 grams, 14.6 meters of 1,810 grams. So well above cutoff grade and very profitable for mining. The key takeaway with all of these that I'm showing you is that the veins are open at depth. So we will mine, produce silver, develop more, drill more, and continue chasing the veins on lateral extensions and at depth. Same story at Rosario's. This was our risk when we acquired the asset. You didn't know whether the veins continued. We believe they did, but you can only prove it with drilling. And so that's why we did all that drilling. And the drilling showed that it continues to be open at depth. That means there's nothing geologically that says that the veins don't continue, and it just needs to rely on drilling to prove the case. So that will be an ongoing thing as we're mining and producing silver. And the same thesis applies at San Marcos. You can see that it's open at depth. Also, we have some high-grade stockpile on the right side of the screen. These stockpiles will be blended in with run-of-mine ore and put right into the plant. When they put the mine on care and maintenance, they just left the stockpiles where they were and didn't produce them. On the left side of the screen is an oxide stockpile. There's about 1 million tons of lower grade material there, and it's worth about $50 million in today's prices. And we will consider producing that at some point in the future, but it's not part of any of our plans today. So where are we? We're working on the debt and offtake agreements, and that should close. Our expectation is it'll close soon, and then we're targeting production early next year, meaning 7 to 9 months from being fully financed. And I'll stop there. It's 5:48, and maybe a couple points about San Diego, our other assets. It has, as I mentioned, over 210 million ounces of silver equivalent based on the 43-101 that was completed in 2013. Our additional drilling from 2020 to 2022 has not been included, and so that's to come in the future. It is now, based on that resource, the third largest undeveloped resource for silver in Mexico, and so it has a lot of value. We had 100 million market cap just on this asset alone back in 2020 and 2021 before we acquired La Parrilla. So there's a lot of value here, and we're looking forward to that. Once we're in cash flow from La Parrilla, we can start spending some more time and attention on San Diego. Okay, folks, I'm going to stop there because it's almost just 10 minutes left. So if there are any questions, I'd be happy to answer.
Very good. We do. First question is a little generic, so I'll make it a little more specific. Could you talk more about Mexico and the particular part of Mexico that the assets are located in and how that's advantageous? And then also the tail end of the question was, are you looking to acquire more mines?
So we're sort of up in the Sierra Madre mountain trend. And if you look at the red corridor, the red dashed lines outline a corridor where there's several mines. Each one of these pickaxes that you see on the screen, that's a mine. So this is elephant country. It's a great place to be doing exploration, and many successful mines operate in this corridor. And as I mentioned, Durango State is a mining friendly state. Mining infrastructure, mining culture, so the workers understand mining. They've been doing it for almost 500 years here, and so that works out really well. Are we looking to acquire more mines? I think we'll do just about anything that will benefit our shareholders. So that's the lens that we look at these things from. If we can make money for our shareholders, we'll consider it very strongly. Right now, we're focused though on putting La Parrilla into cash flow, and then we already have San Diego, so we'll look to see how to advance San Diego.
Very good. What are your plans to allocate capital between La Parrilla, La Parrilla's rehab, San Diego exploration, and potential M&A?
Great question. So the focus, again, will be to put La Parrilla into cash flow. So the money we've raised will all be allocated towards getting La Parrilla into cash flow. And any extra we will keep in reserve, just in case there's any contingencies at La Parrilla that we have to deal with. Once La Parrilla is in cash flow, other things being equal, then we will look at how we can create more value for our shareholders through doing work at San Diego. At current prices, if I go to a slide back here, when First Majestic operated it, they produced about 3.5 million ounces on average per year. I'm looking at the far right, and we'll produce about 2.7 to 3 million ounces a year. Their C1 costs were below $10. Our all-in costs will be in the $20 range. So at current silver prices, producing, for ease of numbers, let's say we're producing 3 million ounces, and let's say that our free cash flow is $15 an ounce, just for round numbers, that's below current prices. That's $45 million a year. So once we're up and going, we'll be generating significant cash flow, all other things being equal. So we'll have money to do more work at San Diego and other value enhancing strategies as we go forward.
Question about exploration expenses and expiration of licenses. I guess that's referring to maybe permitting.
Okay, so good question. Our La Parrilla mine is fully permitted, so we there's really nothing that needs to be done there in terms of exploration. We explored at La Parrilla from 2023 August all the way till last fall. Mind you, all of that drilling was underground, so there's no problem with us continuing to explore there.
I think the issue is more specifically about like exploration costs. So like maybe per meter costs, things like that. Access to site, access to labor.
We're discovering ounces at La Parrilla for about 22 cents an ounce. And if we fully load that cost, it's less than 50 cents per ounce to discover an ounce of silver. So it's wildly profitable. But you got to remember that even at that level of profitability, it's not cash in your bank account. It's metal in the ground. So you got to turn that cash, you got to turn those ounces into cash. And the only way you can do that is either selling the company or putting the asset into production and generating cash flow. So for us, going into production next year, we'll be generating cash flow. And then somebody asked a question about historical or drilling assay data.
Oh, you can see it. You can see, very good, very good.
With historical estimates.
Yeah, I think the question is a little bit more bigger picture. Is there some 43-101 in the picture? Maybe it could be at the other property, but not La Parrilla. La Parrilla is, yeah.
So there is a 43-101 on both properties. The one in San Diego is from 2013. And so that's the one. If you want to look at something, it's 12 years old. The focus of the company being La Parrilla, that's the 43-101 that SRK just put out in March. I believe it was March 24 or somewhere around there of this year. So there's already a new 43-101 on La Parrilla. If anybody's interested in looking at it, it's available on CDAR and I believe also on our website.
Very good. We have had a lot of questions beyond that. I will forward them to you, Greg. Thank you for your time. Can you just please close out with how people can get in touch with you? And yeah, thank you again.
So happy to get questions from folks or have one-on-ones. You can reach out at info@silverstorm.ca, or you can reach out directly to me at greg.mckenzie, McKenzie, @silverstorm.ca. And just put in your question where we met or what conference you attended, and your question, and I'm happy to respond to as many people as I can.
Very good. Appreciate it, Greg.